Hi guys, Piotr here. This is LiteFinance Global YouTube channel, and again, as usual, it's my pleasure to be with you again. Alright, so what we are going to discuss today, we are going to discuss 5 stocks I'm going to look for when it comes to medium and long term, and well, some of them are going to be the long sides. One, to be honest with you, is going to be the short side. Number 5, right? Number 5. And you are going to be so surprised, in my opinion. Anyway, I'm Polish, that's the way how it goes. So, well, number 5 is ETF related to the Polish market, all right? And to be honest with you, if we are going to see the deeper pullback, because you know, the market is worried about the inflation and stuff like this when it comes to the worldwide market, we've seen today European Union report. The thing which is not that great is that probably within 2022 the Poland is going to have the highest, now again, the highest inflation within the European Union countries, but also Poland is going to have one of the biggest rise when it comes to the GDP. Based on the EU projection, it's going to be 5.5%, all right? So that's the positive negative. Of course, we have to take into the consideration other factors, right? We have to clearly talk about the dangers when it comes to the Russia and Ukraine conflict. Why? Because the Poland is the first line when it comes to the borders, both Russia and Ukraine. That's the negative, right? That could influence what is going to happen on the Polish market. Anyway, we spoke about the positives, pros and cons, right? We know the outside factors, the fundamental stuff, right? Let's have a look what you have when it comes to the chart. All right, there you go. So we have this falling channel over here. It looks like this, right? And till now it works beautifully. So we almost hit top of the channel. So if you are a negative short term, right, because that's how it might work, right, we might see bounce of the top of the channel and move lower, okay, down towards 12 when it comes to this particular ETF. But there is one more particular level, all right, based on this 1, 2, 3 formation over here, okay, and move up above certain consolidation zone, okay. So in my opinion, if I'm going to look for the long side of the Polish market, right, I would like to see this over under around 16 and then bottom of the channel around the 12 as the possible buying opportunity with the target to the upside. That's the Polish market. Well, I wouldn't say I'm quite bullish right now because I truly believe we might see a little bit deeper correction. The question is if it's going to be 16 or 12. That's number 5. Number 4, that's gonna be quite interesting from my perspective. I'm going to share with you right now. So that's the Goldman Sachs based on the weekly chart. Well, quite impressive, isn't it? Okay, it is. Why? Inflation, worldwide interest rates going higher. So the banking sector, there is a huge probability is going to be the huge beneficiary, right? Banking sector. Why do I like the Goldman Sachs right here, right now, in front of you? Because we broke through the rising trend line, right? That's the point number 1. The inflation is rising. The interest rates, there is a huge probability based on the Fed dot plots that we are going to see higher interest rates. So this kind of the pullback we've seen lately when it comes to the Goldman Sachs, it's quite bullish. What I would like to see, okay, let me show you exactly, because we are still on the weekly chart. We are trying to close the gap, right? We are closing the gap right now. My trading plan when it comes to the Goldman Sachs is to see the pullback, retest of the swing low, right, and then going higher. So what would be my trading plan here? Okay, I would like to see a retest of that low, stop hand below that low, and this demand zone to hold, meaning that if you are a conservative trader, you want to see pullback from here, because 1 to 1, right, giving us around 280. On the weekly chart, it might looks like a lower shadow, right? You know what I'm talking about. Go for it, Tiger. Conservative, waiting for the lower shadow and close above rising trend line. If you are aggressive, you are looking to buy at 280 with the stop below 245. Okay, that's how I see the things. Let's switch to daily. Boom, shakalak. I would like to see the price action like this. We are right now testing, and that's what I think we are going to have a problem with. Okay, this one. Let me show you exactly. Boom, boom. That's my way of concern. So if that's the case, and the consolidation, perfect target, guys, that's the perfect target. 290, 300, that's where I'm going to look for the possibility to buy Goldman long side. All right, with the rally like this. So when it comes to the Goldman Sachs, I'm not in rush. I'm waiting for a deeper pullback. 300 to 90 is my level to go when it comes to the Goldman Sachs. Looks nice, juicy, sweetie, yes! The next one. Let's have a look what we have when it comes to Facebook. That's gonna be completely different approach. Why? Because previously both Meta platform, yes. Previously, we were bullish. Now, if you wonder how can you make the money within the next few months, then you are going to watch the Facebook, right? From the short side, if everything is going to wrong way, well, that could be your tip. Why? What is important? We broke through psychological level of 260. Okay, that's what you see. So now any kind of the rally is any kind of the opportunity to sell the rally. If I'm going to see the rally to 300, that's my selling level. Of course, one can argue, okay, Piotr, that was consolidation, half point to 80 to 75 could be also good selling level. Of course it could be. So if you like to scale in, that could be the name of the game for you. So when it comes to the Facebook, yes, I'm very negative, but I wouldn't go short at particular level right now. Why? Because we hit support, we hit the amount. Well, guys, it's not, let's see if they can bounce, right? That's how you want to operate in this market. Number two, when it comes to the name of the game, you are going to be surprised. Well, it's Tesla. What I would do, let's have a look. Let's make the simple measures. Number 1, 1, 2, 3, we hit the level. The next one, consolidation zone, 50%. Oh, looks great. Let's get back to the falling waves. Kaboom. Okay, let's have a look bounce from here, and let's have a look what we can get if we are going to make the similar move. Well, the stops are going to be harmed. What I'm looking for, to be honest with you, I'm looking for Tesla to go below 900 to try to trade long side with a very tight stop. Okay, that's my way of trading Tesla. Again, below 900, trying to go long, risk reward, do your own homework, do your own research. Finally, that's gonna be interesting. Number 1. That's number 1, MicroStrategy. Well, in that case, you may want to follow Bitcoin chart. Yes, that's my number 1 medium long term. What is going on? They buying Bitcoin in a speed like no one else, right? What we have? How far can we go lower? Well, below 0. Is it possible with MicroStrategy? No way. So what is going on, in my opinion? Well, fake break to the downside. Why? To accumulate more. Where is the danger? The danger is with this latest weakness. That's my danger. So what is my level of the safety? it's around 500, 550. Why? I wanna see move up, right? I wanna see the stop hunt when it comes to the shorts and rally up of this. That's the point number one. What I'm looking for else, if this type of the plan it's not going to work out. Okay, I have my plan. I always have plan B. Guys, do your own research, homework. Do your own homework and have plan B. Okay, what's my plan B? Well, this trend line is going to work out. So meaning that within the next few weeks, days, we are going to see strong sell-off, but the trend line is going to work out very, very well. Then 800 is your target. All right, top 5. It was my pleasure to provide the information for you. Again, don't forget, do your own homework, do your own research. Wish you great next trading day. See you around. Take care and, well, goodbye.